Okay, greetings everyone. My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. I'm also the mastermind and creator of the Market Price Anticipator software. I'm the educator and instructor. A brief bio. I'm a professional trader for 20 plus years. I'm considered a technical analysis expert. I'm the creator of a one-of-a-kind custom trading software. We founded GPA Trading Services over 8 years ago. We've been educating thousands of students around the world, conducting live events, speaking engagements, platinum program. We offer one-on-one coaching and mentorships. If you haven't had a chance to peruse our website, this is our website. We invite you to do so. Today's topic is going to be analyzing the markets from a multi-time frame analysis or perspective. Reminder, today's theme is to trade smarter, not harder, and that's what the Market Price Anticipator software is all about. Trading smarter, not harder. Now, brief disclaimer. This is your typical disclaimers. I'll just highlight a few points. Trading is not suitable for all people. Some markets are leveraged and therefore it's possible to lose money deposited for a position. A person should only use funds they can afford to lose and that fits within their overall financial plan as developed by a qualified financial planner. Our rules are we never risk more than 2% of our entire account balance on any given trade. For options traders, we recommend you risk more than 5% of your entire account balance on any one given options trade, and always adhere to strict proper money management. Finally, all information in this presentation is for your educational purposes and should not be taken as investment advice, nor as a recommendation or endorsement to buy or sell any specific investment. You're trading at your own risk. Key components in anticipating markets for future conditions would be your support and resistance, trend direction, using multiple time frames, that's the key, and then understanding how the lower time frames cycle within the larger time frames, and we like to refer to that as the hook and cross line of progression. Now, what do we mean by aligning the time frame? You'll notice we have multiple time frames on the screen. It's a monthly for gold, a weekly, and a daily. And on here, we can see that the time frames are starting to align. Our monthly was an overbought territory. We have two indicators of primary interest, price action indicator, and the trend momentum. And when they're in overbought territory, it lines the time frame so we can see what this does for you. When the monthly starts to hook, we call that the PAI hook, and this is the trend momentum cross. When you first get a hook, it means that the weekly has already hooked and crossed because we're looking at a monthly. So when we're on a weekly and we see a weekly that's hooked and crossed, then we know the daily is already hooked and crossed and it's already moving lower. What this illustrates is as the weekly plays down from overbought toward oversold, the monthly dictates that pace. So once the monthly hooks and crosses, the weekly has no other choice, and the highest the probability it's going to finish the down cycle. And in order for it to finish its down cycle, the daily must exhibit specific behavior. It has to go from overbought to oversold, and then this process we call slingshotting, slingshot lower and lower and lower. And notice it takes weeks for a weekly cycle to finish, so the daily cycle is going to be required to slingshot lower multiple times. The same for the monthly. Once the monthly continues to move in a cycle, the weekly is going to move from overbought to oversold and start slingshotting over and over. That's how each time frame finishes their respective cycles. Now, let me just finish the last few items here talking about how it's slingshotting lower. Here's another example of oil where, again, we have it lined up where we're deeply overbought. We actually give you hook and cross trade triggers that fire to tell you when to go short, or with our automated trade management system, it'll automatically enter the trade for you when it's ready to do so. And notice the same principle. This is the weekly, and once it finally hooks, this weekly would never be in overbought territory and start hooking down until the respective daily has already hooked and crossed. And once we get the weekly to show its hook then cross, remember what that means. It means the lower time frame will make the full cycle down. And in order for it to do so and the weekly to keep going week after week after week after week to finish that cycle, the daily exhibits that slingshot phenomenon over and over and over and over and over. And this is repetitive and it's very easily anticipated. So again, just the illustrations of how you're going to keep slingshotting lower and lower to finish that cycle. Here's an example of the pound dollar and currency pair. We're starting to see the pound dollar starting to bottom and starting to move higher. Initially, we see that it's aligning oversold. And what do we call oversold? Whenever the price action indicator is below the green line, meaning oversold, you think about buying. And whenever it's in overbought territory or the red line, you think about selling. Well, the key with this system is just because it's oversold doesn't mean you sell, or in this case, oversold, do you buy? Or if it's overbought, do you sell? The system will automatically tell you when to do it, when it's appropriate, by the time it starts to hook and you get your hook and cross triggers. And we'll speak more to that in a moment. But this is just another example. The monthly starting to return and starting to hook up. Notice it would not hook until you already have a hook and a cross on the lower time frame. This is the monthly, this is the weekly, the daily, and the 4-hour. Notice how the monthly would never have hooked until the weekly had already hooked and crossed. Why is that important? Because with this weekly hook and cross, it means this daily is absolutely going to move from oversold all the way to overbought. It's a given. So think about it. When you align the higher time frames, we know just based on a weekly hook and a cross, we're going to be in that trade for days and days and days and days, so the daily can finish the cycle. The trend momentum and the PAI can move in overbought. And notice as the daily's moving from oversold to overbought, what does the lower time frame do? It moves from oversold to overbought, then it does that slingshot phenomenon. So this works on all time frames. So if you're a scalper, does the system work for scalpers? Best system out there for scalping, best for day trading, best for investment trading. All you're doing is aligning the different time frame, right? So if I get a 5-minute with a hook and a cross, then it means the 1 minute's going to go all the way from oversold to overbought, or vice versa. When it hooks to the downside on a 5-minute, then the 1 minute's going to go all the way to oversold, and that holds true for all time frames. Now let's just finish this little exhibit, just showing each time frame what it consists of and what it does and how predictable that is. So let's go to the charts and show you firsthand why this system is trade smarter, not harder. We were following gold, and I'll take you from a monthly view and I'll bring you back to a smaller view in a moment. On gold, we went back, if you go back in our archives from our live trading classes, which we meet 3 times a week, average about 8 to 10 hours of live trading. We talked about gold rallying, and you could see in my previous classes and recording, I talked about gold reversing right at this point, and I said it would go all the way to 1300. I gave a target of 1314, then 1328. And I said months ago from some of you, I said the likelihood that we start to reverse from this upper quadrant and start stair-stepping lower is pretty obvious. Notice what happened with the indicators. We were buying knowing we were going to cycle all the way to overbought. Someone would say, well, Gary, how did you know this weekly when it first started to turn? How did you know it was going to go all the way to overbought? Because we have that magical relationship. We have a monthly that has a hook and a cross, and then we had a monthly hook and a cross very early on. So even as this is theoretically slingshotting higher, the PAI has hooked up and the trend momentum has crossed. So we got the green line crossing above the red right there. And that is what we call the PAI hook and the trend momentum cross. Why is that so powerful? Because the moment I saw the monthly hook and a cross, I knew weeks in advance, as my weekly was oversold, it was destined to reverse and then work its way all the way to overbought. So this is why we were able to trade this. And again, this was down below 1200, around 1160, and it was well over $140+ move as it stair-stepped its way all the way to overbought. And notice, all you have to do is align the time frames. Once they're oversold, you don't just, hey, I'm going long. You wait until the trigger fires. Then once you got the hook and the cross trigger, you're good to go. Just like we were good to go to sell gold. Now, what I want to show you the magic of a hook and cross. What else does it mean? It means the lower time frames are going to cycle, but with the Fibonacci's, everybody loves Fibonacci's. When I use the swing point high from its original swing point to the low, we talked about gold this past week, and during this week, and beginning of last week, we talked about gold starting to retrace into a Fibonacci sweet spot. I refer to that as a 38.2, a 50, and a 61.8% retracement. And once you see the hook and the cross, the probability it at least retraces to the sweet spot is very high. And why is that important? Because again, we have a daily hook, we have a daily cross. What did that tell us earlier? When a daily hooks and crosses, it means the 4 hour is going to go all the way to overbought. So notice what the 4 hour did for us. The 4 hour went from oversold all the way to overbought. And once it got up there, it's slingshotting higher. Well, how much further is gold going to go before it makes the next lower high than the next lower low? We're lining up. You can see how the 4 hour is getting in overbought territory. You can see how the daily is depressurizing, as I like to call it. When it's oversold, it depressurizes. And is this going to slingshot lower again? Or is this going to go into overbought and start slingshotting higher? How do you know? You look to the next time frame. And the reason that gold is more likely to make a lower high and then a lower low is look at the direction of the weekly. It is a hook, it's a cross pattern down, and it already tried to engage and tried to go on and make a new high, and it disengaged. So this behavior suggests this is going to go all the way to oversold, right? What else do we have that might suggest the weekly is going to finish the down cycle? The monthly is starting to turn and hook. See it? So every time, you're not going to get the monthly to hook without a weekly hook and a cross. And we already have the weekly hook and a cross. Now that we have the weekly hook and a cross, it knows that, yes, the daily has to go to oversold in order for this weekly to finish the down cycle. Well, the daily needs to go to oversold and then slingshot lower and lower in order for the weekly to finish the down cycle. So look at the daily. The daily's doing exactly what we expect it to do. It went from overbought to oversold, then it depressurized to slingshot lower. Guess what it's doing again? It's depressurizing to slingshot lower. So you want to sell this rally on gold and look for it to make a lower high and a lower low. As it continues to follow the weekly cycle down, the daily should repeat this performance. Depressurize, slingshot, depressurize, slingshot. Now, when you look at a daily, you say, okay, Gary, how do you know if it's going to be 1 day, 2 days, 3 days before it turns over? What a slingshot is, at any time frame, it's where the red and blue race off from green within this indicator. But what is it? It's the lower time frame going from oversold to overbought, which allowed the daily to depressurize. And then the 4 hour goes from overbought back to oversold, which forces this to engage. So guess what's happening now? The 4 hours moving from oversold to overbought. And once the 4 hour moves from overbought back to oversold, the daily is going to turn over and slingshot. So this is where this comes in. We can set this automated trade management system very easily to catch the cycle when we're ready to sell it. And you would just go into your expert advisor and say, okay, all I want to do is sell the trigger short. I don't want to buy it. I only want to sell it because why? My 4 hours overbought, and the bias is it's going to turn over and go to oversold and even slingshot lower. So the daily can slingshot down in the direction of the weekly. So once you set your parameter and say, all I want to do is do a trigger short, true, and then you say, okay, then all you got to do is click. Now it's ready to trade. What does that mean? You're talking about trade smarter, not harder. Now this will sit here. What happens if the 4 hour keeps slingshotting higher and higher? Well, if it doesn't trigger lower, it's not going to enter the trade. Once it finally starts to turn in a hook, it's going to fire a trigger and it's automatically going to sell this 4 hour time frame. Now let's continue and look at some other ones. Why is this important? Well, this is important because here was one I set on the Euro New Zealand, and you'll see the same type of behavior. The 4 hour went from oversold to overbought, it slingshot it higher, but why did I want to sell it knowing it was due to go down? Look at the daily. The daily is deeply overbought. It's starting to hook, and this trade management system was set just like the one I did on gold to sell. I set this on the daily time frame in order to sell it. Well, someone would say, well, Gary, I don't see the trigger. Well, on this particular template, I don't have the trigger. The system knows where it's supposed to fire, whether it's on the chart or not. That's how smart the system is. But notice again, this weekly, or in this case, the daily, would not hook. And what do you mean by the hook? Where the red, the blue, and the green just start hooking down. This would never have hooked until the 4 hour already had a hook and a cross. So what does that tell us about the daily hook? Well, if the daily continues, which today I suspect it will when we get the down day and we see this extend and cross, that means by tomorrow we'll see a hook and a cross, which tells us what? This 4 hour that's basically just getting started cycling down is going to finish that down cycle. So I'm going to let this run and ground, engage, and do its thing as it stair steps lower, and this 4 hour finishes that down cycle. So think about it as a trader. When I'm a scalper, how long do I stay in a position? 10 minutes, 20 minutes, 50 minutes, an hour, 2 hours, a day? Well, based on what cycle needs to finish their down move, that's how long you're in the trade at least. And in this case, why is the Euro New Zealand a good pair to sell the rally on? Well, we've been selling the rally on this pair for months, ever since we had this upper quadrant reversal with the hook and cross pattern. Notice the weekly. The weekly gave us a hook and a cross, and once the monthly hooked and crossed, what did the weekly do? It went all the way from overbought to oversold. That dropped 1,000+ pips. Well, now we're getting a retracement in which to sell, and this is going to slingshot over again. Why would the weekly slingshot over again like it did once, twice? Why is it going to do it a third time? Because the monthly is down. See it? Monthly is down, so that means the weekly is inevitably going to slingshot lower again. And what's the rule? How do I know when I want to sell a slingshot? Well, this system is so smart, I can set it to this particular time frame and say, yeah, I want to sell that slingshot. I can tell it right there, use slingshot short. Yes, tell it true. Or as we just mentioned, we can say, well, if we don't want to set it on the weekly time frame, all I have to do is go to the daily and say, I know the daily is due to reverse, and it's due to reverse to go back to oversold. So I'm going to set the pip trapper, as I like to call it. It traps and sets it for you so that you can get the hook. That means we're entered, because even though the trigger is not there, if I add the trigger, it would be there. But that's the key. It can set it in advance. And what does that mean? James, if I set it to hook and sell the trigger, it will not enter even though it starts to go down. If it's not finished its cycle, it will not trigger lower. So it can grind for 1, 2, 3 days. We set this early in the week, and here it is 2 days later, and it finally triggered because we were already overbought. And this is what we set up in our trade class. And watch how this will stair step down over the next several days. And once the daily hooks and crosses, which should be by tomorrow, Then as we go through the next 12, 24, 48, 36 to 48 hours, this 4 hours is going to keep going 4, 8, 12, 16, 20, 24 hours, and it'll keep cycling down as this will keep going up, down, sideways to lower. Now this process continues on any market, whether it's stocks, futures, commodities, ETFs. Everybody loves Apple. You can go back in Apple when we had this big pullback and it triggered higher. I told everyone buy it because Apple's going to start to stair step back. Bare bone minimum, it's going to go to the sweet spot. And what did we end up seeing? The hook and a cross. Where did price stair step to? Our sweet spot. Well, is Apple finished? Is it ready to turn over and start heading back down? No, look at the weekly cycle. We have this phenomenon we call where it engages and disengages. That behavior, similar here, where it started to turn over to engage and then it disengaged to turn out. And this process suggests this weekly is going to finish the upcycle. So is Apple's climbed higher finished? No, it's not finished, but do we need to get a pullback to buy the dip as the weekly continues to push? The answer is yes. Why? Because the daily is turning over. And the daily is about to give us this hook and a cross pattern back down. Previously, we're right at it now, see it? So what does that tell us about the daily? If the daily gives you a hook and a cross down, what is Apple 4 hour gonna do? It's gonna go to oversold. Watch the 4 hour. It goes straight to oversold and then it reverses back up. So we can set this to say buy the dip, either to buy the SlingShot itself, or you can go to one lower time frame and say buy the trigger higher. But notice Apple's not finished. Why? Because we have a monthly hook and a cross up, and a monthly hook and a cross up means this weekly is going to finish the upcycle. Just one second. So that gives us a few more weeks of upside pressure. So you'll notice we type in our strategy and we type in our tactic. If we want to keep buying daily slingshots as long as the weekly is up, what do you mean by the weekly being up? The PAI and the trend momentum. The weekly's still up, so we should keep buying daily slingshots. Look how this phenomenon works over and over and over. So when we first get the hook and across, the daily goes to overbought. Even if it tries to engage down, it's going to fail because the only way it can make the cycle is it has to engage, disengage, engage, disengage. And notice the daily went to overbought. Then what did it do? It turned over to slingshot higher. Turned over to slingshot higher, turned over to slingshot higher. So why is Apple not going to go soaring higher until the daily has time to turn over, then slingshot higher? Well, based on the daily with the hook and a cross beginning again down, we expect this 4 hour is likely going to make its way back towards oversold. So for Apple, if I wanted to set that, all I would have to do is say, okay, on the 4 hour time frame, I just want to buy the trigger higher once the 4 hour PAI hooks from oversold territory. Here's the PAI. Once it gets oversold, the trend momentum gets oversold. We want to buy it when it triggers higher. Well, William, John, what if you're not in there? What if you're not at your chart when that happens? Well, this system will buy it for you when it finally gets oversold. So what if it kind of engages and disengages and it takes 2 days to get down? Then when it finally triggers higher, it'll buy it. What if it takes 1 day and gets down? It'll buy it when it gets oversold and triggers. So it will not activate. It'll stay ready to trade mode when you set it that way until the criteria is specifically met. So again, you could set this today, and even though it might be another day or two before the 4 hours oversold, when it's finally oversold and it's triggering higher, I want to buy the dip because the prognosis is this is going to turn over to slingshot higher. Why? Because the weekly is going to finish the upcycle. The only way it can finish the upcycle is the daily has to do it, then slingshot higher and higher. Well, why do I think it's going to do it again? Simple. The weekly is not finished that cycle. Got it? So I don't care if you're trading stocks, futures, commodity, ETFs, bonds, treasury, doesn't really matter. It's all the same. All right, let's continue. We talked about gold. and it's reversing. Well, let's switch to black gold Texas T and talk about that. Why is this going to be important? Black gold Texas T, the Beverly Hillbillies, has been retracing into our sweet spot as designated by our hook and cross pattern. The weekly hooked and cross. You got your trade trigger right there, hook and cross trigger. So we talked about this weeks back, even a few months now, that you need to buy gold and expect black gold Texas T, as I like to call it, that oil was going to rally at least to the sweet spot because we developed the hook and the cross. And you can see we went down here from $42 up to $63, a good $20+ move based on setting this trade management system to buy the hook and cross trigger and go long. And you could have set it way here as it kept going lower and lower and lower and lower. It would have stayed week after week after week, ready to trade until you finally got the criteria met, then it automatically enters. So what's the prognosis with black gold? The probability it goes up and breaks a new high is very, very low. We're going to expect the weekly cycle to finish, and then we're going to let it turn over and we're going to sell, okay? But in the interim, why is this going to ultimately end up going down? We're engaging, but this is going to disengage, and this will turn over. Watch my big cursor. You see how that's hooking up? It's going to disengage and start turning back down, and this will turn and go back down, and this will continue to go down over the next multiple months as we go through the rest of 2019 into 2020. But when is it going to turn over? Once the weekly finishes that cycle. So on this one, we could set the trade management system to sell the trigger on the weekly to sell short. And even though it may take another 2 or 3 weeks to do it, it's still going to end up triggering lower later, and that's when we can sell it. Well, what happens if I don't have it set and I come to my computer and I see it's flattening out, starting to hook? Sell it instantly. So I can instantly tell my trade management system to sell it right now, or I can set it as a set, you know, like they say, set it and forget it. And then once it finally enters the criteria, it'll automatically sell for you. How cool is that? So why is that important? Well, black gold has been in an over 10-year-long downtrend. And the probability this breaks that trend is very low. The probability we go much higher, yes, we got a little bit more of that weekly, but the likelihood it's going to break that trend line and go on and make new highs is exceptionally low probability. The probability it's going to reverse and make a lower high and a lower low is extremely high probability. And what's going to happen? This is going to disengage. When is that going to disengage? When the weekly finishes the up cycle and starts turning over. How cool is that? So again, you could set it now and let it go a couple more 2-3 weeks until it triggers lower, or you can just wait until it's up there and starts to do it and manually sell it when ready. All right. So why is that important for traders? Because it takes the guesswork out of it. Well, does the system work? Some trading results. Here's black gold. We did a $126 move higher by simply setting the trigger to buy the dip as the time frames got deeply oversold and we were ready for that cycle up. We bought it and we made a $126 move. This is commonplace. We do this day in and day out. Here's black gold. Once we got our reversal trigger, once we got in overbought, notice just because you're overbought doesn't mean you sell, right? You need the proper guidance to know when do you sell. That's where this hook and cross comes in. That's where you wait, and you just wait for the system to trigger and enter it for you, or you wait for it to show signs of the process and then you manually do it, but either way. But notice what this one did. Not a small little couple of dollar move. It was a beautiful $150 move lower, and the one I just showed you, we just went up over $100 on gold. Here's one, a student of ours uses TradeStation, and he uses the signals from our system to place his corresponding trade, 8,600 pips and counting. Because the time frames were in alignment, we call the Slice of Heaven Finder is one of the scanners we use to tell you what's setting up. He decided to continue to let his trades run because the cycles were continuing, and it increased from the 8,000 to 18,000. There it is in his TradeStation platform, all the multiple trades tallying over 18,000 pips. Again, example of gold, just showing how it triggers and slingshots higher based on the cycles. Here's the pound odd. Speaking of the pound odd, I'm going to show you a great trade in a few seconds. And the pound odd did the same thing. The daily is triggering lower. Oh, there's no trigger. It triggered lower. That's how we're in this trade. Then it slingshotted lower by design because the weekly was down. Not a small trade, 778 pips. Well, we knew because the monthly was headed lower, the weekly was headed lower, the daily still had more to go. Why stop? Let it run. So what did it do? It kept running and it made 1,274 pips. Well, we still had more down cycle available, so it continued to run to 2,270 pips. Well, again, the cycle wasn't quite finished on that higher time frame, so we let it run and it managed to go all the way to 3,627 pips. Again, commonplace. Pound cat, same scenario, over 3,000 pips. Pound yen, over 3,200 pips. All by what? Letting the system. So ladies and gentlemen, if you're brand new and never traded a day in your life, this software, by setting the system, will teach you how to trade. It teaches you timing, when to take profits, when to get in, when to get out, based on the cycles, and it does it automatically. So I can do it manually because I want to be in control, or I can set it to auto and let it do its thing. All right, let's continue. So here's another tool in your toolbox called a breakout trade management system. And this is where it allows you during London session. Anybody trade Forex? There's a London session, they call it the London breakout. It's where you allow the first hour of trading to form a high and a low. And then once the high is broken, you go long, or the low is taken out, you go short. Well, this system will allow you to buy the dips in an uptrend or sell the rallies in a downtrend. So I can set it well in advance to say, okay, at London, I want to know the first hour high and the low. It automatically pops that on the chart. It pops in your pending orders, and whether you want to buy or sell, it'll pop in both buy and sell with OCO. So if it goes up and there's the long trade, it cancels the short trade, or you enter the short trade, it cancels the long. Or in the case when we're deeply oversold like this, I would have set it to go back up because the time frames are all oversold, needing to cycle. So what the system does is allow you to set it as a tool. And look, this trade made 272 pips. Not too shabby, $3,600 trade based on a simple hook and cross pattern. Now here's the pound yen current trade running, and we bought the dip and we're starting the stair step higher because the time frame suggests the pound yen's going to finish this down cycle, and then the daily is going to start reversing and turning back up. But even in this example, that's 237 pips. All right. So what are we offering? We're offering what we call a master trader program. It consists of our market price anticipator software. We barely scratched the surface, and it includes our live trading classes. Now, what's included in the software? The scanner, I'm going to show you in a moment, Slice of Heaven Finder. These two are scanners to help you find the next big trade. Our trade triggers we talked about. Our trade management system we briefly showed you. The scalping system, we have a Platinum Asia, we have a Triple P, and we have a breakout trade system I briefly showed you. And finally, we have the bracket trade system as well. So if you know that bracket-wise, you're in a oscillating market, and every time it reaches resistance, you want to sell it, and every time it reaches support, you want to buy it, you can use the bracket system for that as well. Here's what the scanner looks. It allows you to put whatever symbols you're interested in watching, and it tells you everything you need to know. It tells you all time frames, what direction the trend momentum and the PAI are headed. Are they up? Are they down? And are the slingshots forming, engaging, or are the triggers fired? You'll see there's triggers in here along the way. So all that information is at a glance. It tells you everything you need to know for whatever entities like stocks, futures, commodities you might be interested in. The other scanner is the Slice of Heaven Finder, and this will scan through every symbol within the market watch, and it'll automatically tell you who's setting up. The daily time frame, I could set it to a weekly, I could set it to a monthly. If I'm a scalper, I can say I can set it to a 15-minute, and it'll show you how the time frames are cycling within that. So it's all, again, so you don't miss the next big trade. Now, what about gold? Gold shows here in that we got a trigger to go short, easy to sell. How did we know gold was going to stair step higher this whole time and buying the dips to worry about then selling it? Because we knew the weekly, monthly finally started to turn over, the weekly hooked and crossed, and it finished its cycle to slingshot lower. So what are you saying? Tell it to sell the trigger, tell it to buy the trigger when it's oversold, tell it to sell the trigger when it's overbought. That's simple. And this went on, as you can see. Here's another in the FTSE. We did this live in class. The FTSE was turning over with a hook and a cross. We decided to sell it. We ended up making several points, over 240-point move as it stair-stepped lower based on selling the trigger lower and the hook and the cross. All right, and there's the trade management system. There's the take profit, stop loss. This system does everything. When you take your first take profit, it moves your stop loss into profit. It won't allow you to move it out of profit to make a winning trade into a losing trade. It's all built in for security so you make the right decisions. And all the information's up at your top. Now, go ahead and post the link. Now, why the 10 reasons? Because it automatically calculates support and resistance. It automatically identifies the trend of each time frame. Automatically monitors and tracks the time frame cycles, as we talked about with the hook and cross. It provides consistent entries, exits, take profits based on trade triggers, slingshots, and profit triggers. It's set in advance, customizable, or you can do the automation where it'll do it when the criteria is met. And it does manage it from start to finish. It fits any trading style. We got the dual scanners so you don't miss the next big trade. Works on over 800 symbols, including stocks, forex, futures, ETFs, commodities, cryptocurrencies, you name it. It consistently delivers low risk, high reward, high probability trades. So we invite you to join us. Today, we normally have our monthly special at $3.99 a month, which includes the software and our live trading classes. But for today's attendees, we're going to offer it for $2.97. And if you'd like to join us, we recommend you click on this link and join us, and this will get us going. Now, why do you want to do this? Because notice what's setting up. We talked about the pound odd, right? We just mentioned a moment ago with the pound odd. Why do we want to buy the pound odd daily trigger higher? Look at the weekly. The weekly is turning over, but notice this behavior. Engage, disengage suggests this is going to finish the up cycle, and this is likely to continue to finish the up cycle. So we're interested in buying the daily once it gets oversold. And why do we know the daily is going to finish going down a little further to finish that daily cycle? Because this weekly has a hook and a cross. A hook and a cross means this daily is going to finish the down cycle. So how difficult is it to set this to honor the trade? You simply go to your expert advisor to tell your trade management system, hey, all I want to do is buy the trigger long. I don't want to trigger short. We're already past that. I don't want to slingshot up or long or anything. I just want to trigger higher. So you go in and you say trigger long, true, the rest false. Say, okay, now all I got to do is click the button. Now we're good. Now, what does that mean, Tanya? That means it could go down another day or two or three. And what if it goes down and it flattens out and still no trigger? It's still going to wait. It's going to wait. It's going to wait. Look, because this one went down. It went down. It went down. It went down. And then it started to flatten out. What did it do? It triggered higher. Boom. And look how much higher that actually ended up going. So the same thing here. We want to set this, and now I won't miss it. All I have to do is leave my computer running and leave this platform open. Well, Gary, what if we go through Friday and the markets close? Well, as long as I leave my platform open, when the markets reopen on Sunday, it'll pick back up and it'll be ready to fire once the trigger fires. Someone say, well, what is this trigger? That is a take profit trigger to tell you, hey, look out, we're about to finish the cycle. Yes, we might go a little bit lower, but you need to be peeling off profits. We call that a take profit trigger. And within the system, you can tell it to automatically take your take profit triggers automatically for you as well. All right, so why is it setting up? Because the weekly is going to reverse and go up, and the daily is most likely going to reverse and go all the way to overbought. Now that's the way it is for all the pound-based pair. This pound yen, the daily is finishing this down cycle, but once it finishes the down cycle, why would we want to buy it? Because the monthly has a hook and a cross up, which means this weekly is going to finish the cycle, which you say, okay, Garrett, looked like it did, but the prognosis is it's going to slingshot higher, so I want to buy the daily when it's oversold. So how difficult is it to set this one? Same thing. Right click, Expert Advisor, Properties. You go and say, I want to buy that trigger long. That's the one I want. Okay, good to go. Click, ready to trade. Now I promise you, this will stay like that until, what happens if this turns and goes up? It won't fire, it won't trigger until we get oversold. So even if this, let me watch my cursor, even if this went back up, then got back down later, it would trigger later. So I'm going to show you this example. We did this in class, and this was on the euro dollar, and we were talking about a quick scalp. One of the students said, I want to scalp this. Could I do this real fast and scalp it? Well, here, let me go back to the 30-minute, and I'm going to go over here and scroll back so you can see where. And this is the reason why this is so cool. That initially we talked about setting the 30-minute to buy the trigger, and notice no trigger ever fired because it didn't finish the cycle. It slingshotted and slingshotted, but eventually it stayed ready to trade until when? It got to oversold territory and it triggered higher, and it was a winning trade of about 50 pips. How cool is that? So even though I set it to go off early, it never went off, and price went up, it went down, it went up, and until it got fully oversold and met the criteria, it then fired, boom, winning trade. That's how awesome this is. So whether you're trading stocks, futures, commodities, ETFs, and like I mentioned a moment ago, even cryptocurrencies, this is your way to go. And notice, Bitcoin, you can go back in our archives and we tell you, Bitcoin, when it was bottoming, I told everyone, buy it, it's going up massively. Why? Monthly's deeply oversold, starting to hook. Even before, when I started to tell buy this was before the monthly even started to hook, I said buy it because the weekly was oversold. And what did the weekly do? Remember that sign when it starts to engage, disengage, it's a sign it's going to make the upcycle. Well, we have a weekly hook and a weekly cross. Early on, we bought it because we knew the daily was going to cycle from oversold to overbought, trend momentum, oversold to overbought. And how does the weekly continue its cycle? It must turn over and slingshot higher and higher and higher. So with Bitcoin, do we expect it to go higher? I do, because this weekly is going to finish its upcycle, right? And we still probably have at least a few more weeks. So what's a prime target? We use Ichimoku, among other tools, but the bias is we're going to end up going around 7,200, another couple of thousand. Well, if we grind and we do this engage, disengage, maybe we don't go quite robustly and we go a little bit more sideways, but we're talking at least about another 1,000 to 2,000 so it reaches the cloud. And as we finish the cycle, price is going to be over here in this cloud. So what do? You follow the cycle and look for your next opportunity to buy the daily slingshot. What's going to happen next? It's going to turn over and form another slingshot. So what happens when the daily gives you a hook and a cross, right? Hook and a cross down. The 4-hour goes to oversold and it reverses and it continues to do that. So why do you want to buy the dip? Because the weekly has to finish that upcycle. The monthly is already in tune with its hook and cross process. So the hook and cross dictates it's going to move towards overbought. And that's why we'd like you to join us to find out for yourself. And one last one as I'm closing, coffee is in the process of bottoming. hint, 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 we have a monthly deeply oversold getting ready to turn. We have a weekly deeply oversold already starting to turn. And we have a daily just getting started engaging and disengaging. So those of you that trade futures, coffee is going to stair step its way back to this high and make a new high because the daily is going to finish the up cycle over the next multiple days. And with that, I thank you for your time and attention today. And I want to thank Tanya and Traders Talk Live for the opportunity to speak to you today and present for you. Take care and God bless you. We welcome you to join us.